Hi, I'm Jeff Hirsch. I'm here with Rick Bensignor, and he's the president of the InTheKnowTrader.com. This is a new service for you.
Yeah.
Can you tell us?
I've spent the bulk of my career working on the institutional side,
right,
but I created InTheKnowTrader to be able to allow retail clients some of the same type information that institutional clients get that they often can't find elsewhere.
So what is it you're providing that people can't find elsewhere?
So we put out a newsletter each week, and we're actually even creating a new one in March, so we can talk about that in a second.
Sure.
But what we're basically doing is putting out institutional quality research, timing models, where institutions are playing the markets, which is not typically something that retail clients get a chance to see. Yeah.
So where they're buying the market, particular stocks, indices, commodities, ETFs, what do you...
Yeah, we go across all four major asset classes, so we do equities, bonds, foreign exchange, and commodities. We tend to work more on the ETF side. Sometimes we do an individual stock, not too often, but mostly we want to make sure we get the indexes right, that we're playing the bond market right, the dollar, and these days there's so many ETFs that track even foreign exchange markets.
Right.
You know, a retail client who doesn't have a futures account can still follow what we do.
So is it specific stocks? Is there any fundamental analysis to it? Is it something that's all technical? I mean, give us an idea of what you're giving people.
Yeah, it's so rather than thinking in terms of just being technical, we look at it in the umbrella of behavioral finance. Right? So we look at everything that affects the market that a typical fundamental analyst would not look at, doesn't even know how to look at. Right? So we know historically, I've been in the market 35 years, half the market movement has nothing to do with fundamentals.
Rising tide lifts all ships.
Right. So what we're doing is trying to exploit where PMs make inefficient decisions, make the wrong decisions. Portfolio managers make wrong decisions and tend to buy things that they're dumping out of, as long as we can figure the right time and place. And we'll sell things that look great, but we can identify that they're actually price exhausted at the point in time of the actual exhaustion, not after they've sold off 20%.
So can you give us an example, not future looking, but something recently that somebody might have gotten from you as a subscriber to your newsletter? Okay,
so for instance, back a couple months ago, I don't remember, it was December or January, gold had broken out to the upside, got as high as about 1360.
Sure.
We exited gold the day it made the highest high in 2017 from our long gold position.
Early February or early January? Late January.
I think it was even, I think that exit was even in September of last year.
Okay.
It then broke under 1300, got all the way down to 1240. At that point we said, you do not want to be a seller of gold. This is likely exhausted to the downside. And actually the only reason I didn't put out a buy recommendation is because I thought gold would have really strong resistance at 1270, and I didn't want to put out a trade for 30 bucks. It blew through there and rallied 100. So we got long at about 1320 or so. Taking off profits. We're flat gold right now. It's often a choppy market, but that's the type of thing we do. We find where portfolio managers and human beings in general make mistakes in the market because of all these cognitive and emotional biases they have that screw up the reason why you make logical decisions.
And you exploit them.
And we exploit them.
Thanks very much.
Legally, kosher, all the right ways, but yes, we figure out how to take advantage of other people's mistakes.
Excellent. Thank you guys for joining us.